Welcome to the United Sovereign Podcast, where we help individuals unbank themselves and take back control of their finances through blockchain technology using cryptocurrency and options trading. It's been over a year since my last episode, which was also my first, so let's start fresh again, down the rabbit hole and understand again the importance of your purchasing power and understanding what Bitcoin is. I have had experience and time in diverse cultures all over the world as a Marine from Japan, Thailand, Korea, and several U.S. states. A crypto investor since May 2017 when BTC or Bitcoin was around $1,500. I use the Ledger Nano S. The exchanges that I use are Binance, KuCoin, and Bittrex. My main focus is to teach individuals about the concept of growing your fiat currency and what the value of a dollar represents today and how to beat inflation. I believe crypto was my driving factor in helping others on this path to financial freedom. Feel free to contact me by email if you have any further questions. Alright, let's get to it. Our purpose is to empower more individuals to aim to become financially free by understanding the purchasing power of the dollar and the power of investing to go on to create better change for the world. These are the apps and platforms I'm familiar with that will get you caught up with the times, basically. The Cash App. It's an online banking with peer-to-peer payment system. Bitcoin is also available. I recommend using that starting off. Coinbase, a crypto exchange that currently holds 15 different crypto assets. $10 for each referral, and you can also transfer directly to PayPal instantly. Robinhood, mobile and web, stock and option trading platform. Do not buy crypto that you don't plan to hold long term or to transfer. Reason why, they don't give you the option to send your crypto to any other exchange. You're only able to buy and sell there. The Easy Calculator. Different calculators to determine the rule of 72, price differences in percentage form, ROI calculator, etc. Google Authenticator is a two-factor authentication to add an extra layer of security to prevent hacks of information. CoinStats. CoinStats is a mobile, free app that lets you keep track of the entire crypto market and follow your favorite digital assets with the latest news and analytics. Purchase version is available as well. And the last app you should be using is TradingView. It has all the charting tools you need to share and view trading ideas, real-time data, and browser-based charts that lets you do your research from anywhere. Since there are no installations or complex setups, just open TradingView on any modern browser and start charting, learning the best entry points to buy and know when to sell. There's a free and also a paid version as well. The objectives that I want to cover are understanding key financial terms. Are you smarter than a dollar? In forms of your purchasing power. Cryptocurrency. And last, difference in investments. Financial terms. Understand these terms to familiarize yourself with the knowledge moving forward. Fiat currency, a currency that's established as money without any intrinsic value. Purchasing power is the number or quality of goods and services that can be purchased with a unit of currency. The rule of 72 is a math formula to determine how long to double your money. Inflation, when the value of the currency decreases and goods and services increases in value. Cryptocurrency, a digital asset designed to work as a medium of exchange that uses cryptography to secure financial transactions, controls the creation of additional units, and verify the transfer of assets. Bitcoin is the world's first mainstream cryptocurrency and first decentralized digital currency with no need for central banks or government. Option trading, a financial instrument that is based on the underlying stock. Calls. Calls allows the holder to buy an asset at a stated price within a specific time frame. Puts allows the holder to sell the asset at a stated price within a specific time frame. So to put that more simply, calls if you feel that the price is going to go up, and puts if you feel that the price is going to go down. Return on investment, expressed in percentage form, the amount of currency earned from that initial investment. Are you smarter than a dollar? The decline of the dollar. Around 1913, $1 had a value of $25, which was a little more than 1 ounce of gold at that time. The dollar was taken off the gold standard in 1971, and since then, the United States dollar has been a fiat currency ever since. $1 now has a value of 4 cents over a span of 100 years, which is a 96% decline in value over that 100-year time span. On the other hand, if you were to continue to own gold instead, 1 ounce of gold from 1913 had a value of $25, and now it will be worth around $1,300. That's basically over a 5,000% increase over that time span compared to the US dollar, which is a 96 decline in value. The Rule of 72 explained, a mathematical formula that determines how many years to double your money, correct? You always want to divide the number 72 by the interest rate that you're getting to determine how many years it would take on each investment to grow. The higher the number, the faster your currency compounds in value. So to give you an example, 100% will give you your equal investment back. 200% will double your investment. 300% will triple your investment. 400% will quadruple your investment. And 500% will basically 5x your investment. So I hope you get the point on percentages. If you made a 100% return, you basically made your equal investment back. If you made a 300% return, you spent the $100, you basically 3x your money. So you made an additional $300, will put your total at $400. The $100 that you spent and the $300 that you made in profit give you a total of $400 with that 300% return. Where do most people put their money? In my opinion, I'll say banks. And this is what your money has been doing over the years. Most save at banks, where you receive a 0.01% interest rate a year on your savings account. If you use the rule of 72 and divide 72 by 0.01, that means that your money is doubling every 6,391 years. I believe that's 90 lifetimes you will have to live just to see a 100% return in investment. Just a 100% return. You have to live 90 lifetimes. While a person with more financial knowledge can gain 50% more in interest per year, which means their money will be doubling every 1.7 years if they made a 50% return that year. Who controls the currency that you use? The Federal Reserve System is the central banking system of the United States of America. It was created on December 23, 1913, after a series of financial panics that led to the desire for central control of our monetary system in order to alleviate financial crisis. The Federal Reserve is not a part of the government, but a privately owned bank. Cryptocurrency. What is Bitcoin? It's a digital asset designed to work as a medium of exchange that uses strong cryptography to secure financial transactions, control the limit creation of additional units, and verify the transfer of assets. Bitcoin is the world's first mainstream cryptocurrency, which is a form of electronic cash and a store of value. Bitcoin holds its value because there's a limited amount out there, kind of like a nugget of gold or silver. There's only a 21 million supply that's ever going to exist, so you can't create more Bitcoin, which will maintain its value, unlike the dollar, which deflates in value because the supply keeps on increasing over time. Blockchain can be a public ledger or a private ledger. It can be resistant to modification of the data. It can be open or closed distributed ledger that can record transactions between two parties efficiently and in a verifiable and permanent way. That's what blockchain can do overall. Cryptocurrency mining, or crypto mining, is a process in which transactions for various forms of cryptocurrency are verified and added to the blockchain's digital ledger, private or public. By mining, you can earn cryptocurrency without having to put down money for it. Bitcoin is mined in units called blocks. You need either a GPU, which is a graphics processing unit, to mine, or an application-specific integrated circuit, which is an ASIC miner. Mining rewards are paid to the miner who discovers a solution to the algorithm first, and the probability that a participant will be the one to discover the solution is equal to the portion of the total mining power on the network. As I said, Bitcoin is mined in blocks. The reward for completing a block used to be 12.5 Bitcoin. The price of Bitcoin right now is around $10,300. So multiply that by 12.5 for each block. When Bitcoin was first mined in 2009, mining one block will earn you 50 Bitcoin. In 2012, this was halved to 25 Bitcoin. By 2016, this was halved again to the current level of 12.5 Bitcoin. Next year, in 2020, the reward size will be halved again to 6.25 Bitcoin. Every time Bitcoin has been halved, the price has skyrocketed. Difference in investments. This has to do with the stock market, and these are basically different return on investment vehicles. One has more risk, but with more risk comes more reward. The other one has less risk, but less of a reward. The difference between stocks and options. As a stock, let's say Tesla for example, that you had one Tesla stock, it cost around $250. So you buy one. So you have $250 basically worth of Tesla stock, which is one share. It grows to $500, meaning that it doubled in value. That means that you made 100% profit, which is basically the whatever you invested in, which is $250. You just doubled your investment, or made back your investment. If you have a Tesla option, and you already know that the price eventually is going to make it to $500, you will purchase a Tesla option call for $500. The price is already at $250 currently, so you're anticipating that the price is going to reach that price line by a certain date. Let's say that happens. Let's say that it reaches $500. That means that you would have made a 5,834% increase, or 58x your money. Why did your money increase by so much? Because let's say that $500 call option costed you $64 per contract, and by the time the price reached $500, it was now worth $3,798 per contract. So $64 into $3,798 is a 5,834% increase in your money. So, would you rather turn $250 into $500, or would you rather turn $64 into $3,798? For me, I'll choose the latter. Just so you know, if you spent that same $250 instead of buying the stock and use that to buy the options, you will be able to afford 3 contracts. Let's just say 4. So $256 it will cost you. That will give you 4 contracts valued at the $500 call area, and each will be worth $3,798, and you will have 4 of them. Basically, that you will have $15,192. This is a video on why you should want to be involved in cryptocurrency. It's 28 minutes, 7 seconds long. Enjoy. If you would like to reach me and make an appointment after email verification, use this QR code to reach me there. If you'd like to use Coinbase, use my referral QR link code, and we both will get $10 once you exceed the $100 trademark in your Coinbase account. Lastly is my Robinhood QR link referral code. If you want to do trading, stocks or option trading, use this code and we both will obtain an identical free stock. And last but not least, another word of advice for all the people that talk about owning gold or investing in gold and the potential that it has. I don't feel that it has as much potential as Bitcoin has, just based over the history of gold. So if you held gold when gold was $257 per ounce, not $25 like it was back in 1913, but $257 an ounce, since 2001 to 2011, you would have a ROI, which is return on investment, of 639%, which is 6 extra money. So $257 will be worth $1,900 at the moment. But if you held Bitcoin and you only had $100, since 2013 up until 2017, you would have a ROI of 18,900%. So that means that $100 will be worth $19,000. Choose wisely.